Good morning, everyone. Welcome back to the natural gas, commodities, and gold and silver and the US dollar update. So today we'll be looking at price action as well as support and resistance levels for the potential to play off of, as well as the most likely scenario where price would likely be heading into next week. And I'll be doing the stock market update tomorrow. Really busy week for me. And so tomorrow we'll be looking at QQQ, S&P 500, as well as Tesla, Nvidia, Apple, Amazon, Google, Microsoft, and Meta. All right, let's get started with natural gas first. And I put timestamps below. So if you guys want to jump to any other of the tickers, just click the timestamps in the comments. All right, so natural gas on Tuesday, I talked about where on this candle that we confirmed a daily uptrend for the first time in a while, and we should be getting some follow through. So we did get some follow through on Thursday, but we hit pretty much resistance right away. There's a couple of resistance coinciding in that area. First one is that you guys can see this maroon looking line, downtrending line. You can see rejection twice there, another 2 times here. So this is the 5th time it has rejected that area. As well as the horizontal resistance at 2.8, which is these levels right here. You can see a lot of rejections around this levels. So when there's more confluence of resistance or support in one area, the more likely it will reject. As well as we ran quite a bit already to that level, 12%. So a little bit of an initial rejection makes sense. And because of that rejection, now the most likely scenario probability of going into next week is that we'll likely see a equilibrium tightening up. So in an equilibrium just means that the prior move is within the next move. So the next move is within the prior move. This is the initial move. It's a big drop. Now we get a big bounce. So the bounce is within the drop. So it doesn't go beyond it. Same thing. See, this drop is getting smaller and smaller, and the bounce is smaller than the drop. So now we're going to probably tightening up into next week. And once we get this equilibrium break, then we'll know when volume comes in. Either nobody's going to know if we're going to break upside or the downside, but when it does, it'll be very clear. We'll see volume coming in down here. Either it's going to be bear volume or bull volume at that time, and we'll get a lot more follow through from these price actions. For now, it looks like it's just going to be tightening up. The most ideal scenario for bulls will be to hold above 2.62. So we just dropped around here, make a lower wick, bounce, and then tighten up, potentially break out of this tiny range, and still having its daily uptrend still intact. Because currently this is the pivot, so we still got a lot of room before it becomes a neutral trend. Right now it's going to be an uptrend, so let's say we drop here, and then we bounce, and then we tighten up a little bit more, and then break out of that. That'll be the most ideal scenario for bulls, because the uptrend will still be intact. The most ideal scenario for bears, obviously bring it all the way down, bounce off of this bottom line, reject from this 2.62, and then go lower out of that range. That's the 2 scenarios we'll be looking at. And obviously, if we broke out here, and it doesn't have to go to the end of the pattern. Equilibrium doesn't mean we have to like trade all the way till into October 10th right here before it breaks. It could break anywhere from now to October 10th because we're already pretty tight already. Yeah, like over here, while over here, I would say the most lucky scenario is obviously a rejection of there. But when we get to this tight, it could be anywhere from here now on. That could likely break already. Yeah, so those can easily just shape up the continuation of the daily uptrend next week. Just be an initial rejection, and then next thing you know, you broke out of it. Let's take a look. It's not a bull flag anymore. I'm just eyeing out, but let's take a measure. See, yeah, because we broke 0.382. We're not above 0.382. It's not a bull flag anymore. So what we do is we measure from the bottom of the move to the top of the move, and the size of the retracements needs to be within 38.2% for it to be a bull flag. And so far, we actually gone below 50%. So that's why the most likely scenario is an equilibrium. If it goes below 50%, starts favoring the bears on the bounce. So it'll probably form something like that. Let's see about that. Let's take a zoom into the hourly chart. We probably confirmed an hourly downtrend already. Let's see here. Very choppy, but yes, it's an hourly downtrend. So, but yeah, no huge red flags at the moment. But hourly trend will be our guide. Hourly uptrend here into an hourly downtrend. Probably we're just gonna chop around. So not much going on probably in the next week or so. Let's see. If we go through the full week, it'll take us to roughly 22nd here. We'll still be over here. Yeah, so we could be chopping around for a couple of weeks if this does happen. Yeah. 22nd will still be here. October will still be here. Yeah, October 2nd. So we will see about that. See how if it ends up chopping around or not. But get ready once it breaks out of this tiny range. There'll be a place to get into because we get a lot more follow through from bulls or bears if it breaks out because it'll have volume coming in, and those are the kind of plays that you want to be in because if you're getting chopped around here, if you're just holding, right? So you get in here, green, oh now you're red, you're green, oh now you're red, right? It's like it's nothing much going on unless you're day trading it or short term swinging it, right? You take profit, but most people don't really aren't as active as they are in trading, so they like to hold. So at the moment, not as much going on. We'll assume they will, so not too long. All right, take a look at UNG. The UNG is the tradable ticker for natural gas and similar. So we had that daily uptrend confirmed here on Tuesday, and we pretty much a tiny bit follow through as well and hit that resistance. Same thing, 7.17. The pretty strong resistance. You can see all these times over here, cluster here. Um, you can see there's a lot less volume above 7.17, and but below it, there's just a lot of resistance. So the less volume in one area means the less resistance or support in one area, and it's more easier to cut through it. At the moment, we're still in this top zone, pretty much the center of this whole price action. And currently, I'm still looking at this megaphone, even though resistance, support. It's been bouncing off it 5 times. Let's see, how far are we from it? We are 6.4%. I don't think we're gonna go down there to test that again. If nat gas goes down to all the way down here, to the bottom of its equilibrium, ENG will probably hold around. Probably gonna be higher than this one over here. So I don't think we're gonna make it all the way down to that bottom of the megaphone here again. But we'll see. And yeah, the uptrend still intact. And let's take a look at the weekly. Weekly, nothing going on because it's just choppy, too choppy. No real trend in here for me at the moment. Yeah, just a choppy megaphone. So let's go to the hourly. Hourly trend similar to net gas, uptrend to a hourly downtrend, and yeah, we'll be eyeing that equilibrium if net gas continues to shape that up. UNG is also going to be having similar price actions to that. It'll be slightly different, but it'll be like similar in the big picture. This one also has a slightly downtrending resistance line. It's also a falling wedge. I don't like that we had this 2 candle here, but it's a visual guide. So a falling wedge here with that megaphone. It's gonna act as a resistance when we come back up to it. We'll see. if it rejects again or not, then it'll be a decent visual guide for us to look at. All right, let's take a look at gold. And so the dollar was strong on Friday, and for the first time, gold actually outperformed. So when it was in relative weakness over here, um, you can seeing the shift of the strength once it hits support. So you guys know how I talk about relative strength and relative weakness is switches as it hits resistance or support. So when it hits resistance, it can shift to relative weakness, meaning the price action will be a lot weaker comparing to its peers. Like when you're comparing to the dollar, it's inversely correlated. So once the dollar keeps going higher, gold keeps going lower, and you can see at one point, dollar still goes higher, but now gold is holding on because it hits support here. Now, so when relative weakness shifts to relative strength, um, you'll likely get when the dollar goes up, you'll be able to negate that inverse correlation because it shifts to relative weakness. And so we have tested this resistance again. So this downtrending maroon line has been acting as really strong resistance for a very long time. So over here 3 times, over here another 5 times, over here a whole bunch again. Now another one here, and now we testing again. So I wouldn't say that it's a complete rejection. Obviously, if we get a red day on Monday, then that is a rejection. But at the moment, it could just be a slight pullback. So let's zoom into the 15 minutes, take a look. Strong move, slight pullback. I mean, this could still go back up, right? So at the moment, it already retraced close to 50% probably. Let's see here. Yeah, we're under 50% already. So next move, next bounce. The bulls don't make a new high above this prior high and break out of that maroon looking line resistance. This will favor the bears to come from a 15-minute downtrend. Probably an hourly one. Let's see. Yeah, this will favor the bears for an hourly downtrend over here because the size of this drop is already over 50%. So we'll see if the bulls can make a new high. If they don't, then we're likely to get an hourly downtrend. And if that happens, that is a clear rejection from that. We're looking resistant again. And yeah, they'll probably come back down to test this support zone again. This level of support as well over here to retest. And maybe you'll bounce, but we'll see about that. All right, take a look at the dollar. This dollar is still strong. No signs of slowdown. Yeah, we've just been looking at this, and there's no red flags on the bull momentum as we've been looking at this for the past couple of weeks, and it's still going. So every time it makes a new higher low, like a pivot, it breaks out to a new high. So the daily uptrend just intact and continuing. A little bit of a fake out here, but especially this day right there, we broke through the support. V shape came right back. But, other than that, it's the trend. The 12 EMA is pretty good for the trend guide. So that just means the exponential moving average type 12. We've just been bouncing off of it every time we touch it, other than this one time. But yeah, use it as a guide. We bounce off it again on Thursday, I mean, and then to move. So the next level of resistance I'm looking at would be, let's see, pretty much added already. So current spot, and then right above that, 105.66 would be the level. Actually, a little bit lower, like around right there. So 105.64. It's gonna be a strong resistance. It's gonna be a little bit here where we're currently sitting right now. You can see as well. Currently a double top, but hourly, yeah, no signs of red flags even on the hourly. You can see on gold it retraced over 60% on the entire move. This you can very easily eye out and see we were probably only retraced about 40. Let's take a look here. Yeah, roughly 40. Still within. You can count this wick or not. It's up to you. But we're still within the bull flag zone. The idea is there. It's still bull flag here and then continue. So it's a lot stronger. And then gold, as you can see that. All right, let's take a look at silver. So our relative weakness still intact until Friday. You can see once it hits resistance, this weakness while the dollar was dripping. And on Thursday, support right there. So you can see silver held very well despite the dollar having a green candle like that and closing at the height of its day. So you can see on Thursday that relative weakness shift completely to relative strength. Really, even the dollar didn't move that much on Friday, pretty much flat, 0.01%. And you can see silver bounced. So as this on Thursday shifted relative strength, the next day you can see bulls bouncing and buying because that correlation of that shift. And it's a big picture overall, still in this wedge. So you can see resistance, 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 support along the whole way, and it may just tighten up for the rest of the year. That. But if the dollar continues to go really strong, let's see, it breaks 105.6 and then head back up to the top of this range, then silver might there from this pattern. But as of now, we don't want to be guessing that far because it's still quite a bit away. So if we get a slight pullback on the dollar, this could be a bigger signing range here. So that could happen as well. And then this could bounce back up to this level, right? So that could be the scenario as well. So we'll see about that. All right, that's all I got for you guys on commodities. And we'll be updating you guys on stock market tomorrow. And feel free to like, share, and subscribe if you guys made it this far or learned anything. And have a great rest of you guys' weekend.